A lot of people and a lot of businesses focus on the next shiny thing.
Yeah,
it's easy to get distracted by AI bots and these different kind of new technological advancements, but really a lot of businesses just want the basics done well. It's easy to be reactive,
right.
But it's also more important to focus on the bigger picture. So things like making sure your conversion optimization is done well, helping the business succeed in whatever way we can as well, as a partner versus kind of like client.
Hello and welcome to another episode of Ways to Wealth. Today I am joined by Leighton. Leighton, give us the too long didn't read on who you are and how you got here.
Hi, I'm Leighton from Ladder & Co. We do digital marketing, so everything from analytics through to a little bit of branding, primarily focused on giving results to clients or to businesses, and mostly New Zealand SMEs, but everything from larger businesses, e-com businesses, overseas businesses, where referrals come from. So a bit of everything, but primarily it's performance focused digital marketing.
Right, that's cool. And you weren't always in that. So how long have you been running the biz?
I've been running for 5 years. Before that, I worked for another digital marketing agency, and then the one before that as well. And prior to that, I was involved in finance, so marketing finance. So, private wealth, insurance products, worked on Q Card for a bit. And so a bunch of things prior to that.
You were always involved in distribution and basically marketing, and you cut your chops in the financial world, and then basically kind of started getting into the digital marketing space more broadly.
Exactly. Probably about 10 years ago, I worked at ANZ, and we did a lot of customer database mining around different insurance products and wealth products to different consumers based on credit card data and bank data. So sort of carried that through from, I guess, analytical marketing perspective through to today with Ladder & Co.
Oh, cool. Did you always think / know you would be end up a business owner?
No. I started in the peak of COVID, so March 2020.
Yeah.
And that was really just, I ended my role with the previous company, and and then went contracting because no one else was hiring. So started as just a one person contract, and then built from there. So it tended to be quite successful. We really focus on retention, so giving customers a good experience, good results, and over that time just got more and more referrals and built the business from there.
It's amazing what a good amount of referrals can do for a business.
Yeah, to be fair, it's how we've primarily built the business. We do need to do more branding and advertising ourselves. It's a little bit like the builder's houses never finish.
Yeah, top of funnel's very hard, right?
It is.
What we're finding in our business is that we're killing at bottom of funnel. Bottom of funnel metrics are all well ahead of where we thought they'd be. And then top of funnel is like far away from where we wanted it to be.
Bottom of funnel being close rates?
So basically paying customers and high value paying customers, and then assets under management as well. So those three metrics are kind of like what we consider bottom of funnel.
Yeah.
And that's going that's been really strong for us. Like, we've really noticed it'd be really, really cool. But top of funnel is very hard.
It is. It's also hard to measure. There are companies like Tracksuit and various other ones that make it easier to manage your brand progress. But it's very easy to spend a lot of money and not understand how that's tracking through the results. And it can be a little bit murky if you're not tracking it correctly as well. So, but if you think of big companies like Coca-Cola or Microsoft, Google, they are very much focused on top of funnel, right? So in the long term and on the aggregate, it works, but it's difficult convincing small and medium business owners to focus top of funnel and grow their audience, while for working on bottom of funnel and conversion and that sort of thing as well.
Yeah, and then the more convoluted, the more innovative, which can come across as convoluted, you are, right, the harder it is to really nail your top of funnel early.
It is.
Because it's like, well, what even are you? In some cases, especially with new tech products and such and new ways of doing things, is that you've got like some business that's kind of pretty well established and, going from 0 to 1 is very known. Like starting an insurance book is pretty, the basic blueprint is pretty there, it's pretty established, and you can kind of go out and do that. But if you're trying to, what Tracksuit did, as an example, then that's kind of a new way of approaching things, and then going from 0 to 1 is much more difficult.
It is, and I think it's always a mix of focusing on your product or service versus the outcome that you want the customers to have, or the outcome that they will get from your product or service, because a lot of people focus on, we're an insurance brokerage, or we provide brand insights for Tracksuit. But really the outcome is being able to, for Tracksuit, adapting your, changing your business model or changing your advertising model to suit, what the customer's after. Or in a brokerage, you're selling, freedom if you get injured or have income protection or whatever. So I think it's a lot of business owners don't think about that. They think about what they sell, but not how their product or service improves people's lives.
So features are more easy to talk about there for the business owner. However, the outcomes is maybe where you should focus.
100%, because the consumers care about the outcome, right? They don't care about, well, they do care about the features, but most people care about the outcome more than the features.
Yeah. And that's what we're thinking about more. Like, I'm challenging the team at the moment to be like, hey, how do we speak in market? Like, how do we communicate top of funnel? How do we communicate who we are, and what's our intent on how we actually want the market to receive who we are? I'm really trying to nail that down, because I have a very clear vision of where we need to go. But then I'm not so good at how that should be communicated and how our brand voice should be kind of disseminated throughout the world.
Exactly. I think it's also, we've briefly discussed, the business model before, but I think it's also difficult to highlight, what aspects of the business are more or less important, where someone enters the business funnel versus, the outcome that they should get to, ideal versus fringe customers as well. So it is, especially when you're focusing on a premium product or premium service. It's easy to get some people focus on the low hanging fruit, but sometimes you're better to build your brand and focus on your high return on investment type products or services.
Right. Yeah, that's right. So you did mention that you weren't really expecting to be a business owner early.
No,
you didn't see yourself maybe as an entrepreneur, but it kind of circumstance led you to start, right? But no, it's really, which happened to a lot of people in 2020. And now the whole economy and the shape of the economy has shifted because of that.
Yeah.
And now you've got a lot of people have their own personal wealth, their own books of work, essentially, that they manage, and they have maybe multiple streams of income, which means that unemployment data is weird these days. And you'd say, oh, well, based on the amount of pain everyone's theoretically feeling, how come the data isn't that bad? And you go, well, maybe because the shape of the economy and how people operate in it is now shifting right in front of us. What does that mean for personal wealth? What does that mean for career, business ownership, kind of having a future? You'll be well across the arcs, right, of accumulation, decumulation in financial services. And every step of your journey in your life is mapped out on when it should be into retirement. It's kind of like, well, the shape of the economy has changed. So has the shape of that arc changed?
Yeah, I think so. How would the employment data be shifted by you're saying business owners?
So if you have less people that full-time employees, for example.
Right. Yeah. Got it.
And you've got more contractors.
Yeah.
Like that's like, oh no, so when that contractor I have 3 sources of income.
Yeah, that's good.
Then if they lose one, and that might even be 80% of the revenue, they still may not be counted as unemployed because they got some residual income that can sustain them for a while. Hence, yeah, the shape of the economy being a little bit different. And companies are very focused on, oh, well, how do I keep my liabilities down? Which they maybe in theory should be doing. But what that means is you have less full-time employees, more contractors. Hence the...
Yeah, I think it is becoming more of a contractor economy as well. I think with employment laws, I mean, employment law is not my scope of expertise by any stretch, but it seems like with employment laws and with global companies and global, with people being able to employ people from all around the world, it makes sense to look at contractors, especially during uncertain times, or even just shifting technology, right? Like from a coding perspective and AI and things like that. It makes sense to look at global expertise.
Yeah, for sure. And then actually I've seen like a few of my friends that have been subcontracting to international companies. They've been killing it because they've been earning in US dollars.
Yeah, well, that's
So in the last 3 or 4 years, they've been just screaming it. But I did this presentation for the FinTech Festival 2025. That's on my LinkedIn. Yeah, and I did a presentation. I started off with, some information about the banks. It was quite uncomfortable. And then I talked about the fact that the average Kiwi household has really struggled over the last couple of years. How the average house price in New Zealand has gone down by about $161,000, probably paid about $90,000 in interest. And the currency has got about 13% more devalued, against the basket of other currencies that exist out there. So it's like, you may not have headline inflation that high, but your actual net buying power, and if you measured your house and your net assets in US dollars, you're not down 20%, which the housing market's down, you're down 40%.
Yeah.
So it's like relative wealth actually against what we consume in, and we consume so much in US dollars, like Netflix, Google Drive, gas, all these things we consume ultimately in US dollars, but we don't think about it in US dollars.
No.
And it would be worth us actually thinking about it a little bit more, perhaps.
I think so. Yeah, I think financial education, like you learn it pretty quick when you have a business, but I think a lot of people don't think about hedging currency and inflation and what inflation means, and that it's compounding. If inflation's going down, it's actually not going down, it's just going up less quickly.
Yes.
So I think I think financial education is really important, because a lot of people just go about their lives, and also I think if you're on a fixed income, it's like an employee income, it's really important to because you can only cost control, right? You can't income control at that time.
Yeah, that's right.
So I think it's
you don't have an appreciating asset. Your job might be an asset of some sort, because you can say, well, I'm likely to keep this job for the next 5 years, and that means that even though my income's 150k, this job's probably worth 400k to me.
Yeah, that's it.
Right? Yeah. But I don't get any equity upside on what the business value goes from now, I say 4 years from now. Yeah. And I've always been a big advocate for, hey, try and get some skin in the game any way you can, because it can be really, really great. It can be a really great method for basically creating non-linear outcomes.
Exactly.
Which you kind of need.
You do. Yeah, you do. Well, I mean, as we discussed, like, inflation's non-linear, right? Like it's, and I think as well, it's really important to take into account compounding interest or compounding returns from investment as well.
Yeah, and the fees that can compound from consuming product.
Yeah, no,
what
exactly.
What is the fees of actually consuming X managed fund over 20 years?
Exactly.
But it's tracking what? Is it tracking the S&P or the world, the MSI World Index? And what are you paying for that? And what do those fees look like over 20 years?
Exactly. And I think more opportunities for people to have, I guess, more diversified investments is a great thing.
Yeah. I like yeah, it's, I always kind of, do you fluctuate between a blowing going concentration and diversification? It's kind of like there's this weird like unknown balance of like, you know, everyone in investing in tech and entrepreneurship I've known that have made like really extraordinary returns. They've been heavily concentrated, highly convicted, heavy amount of concentration.
Well, I see Elon Musk doesn't own any property, right? Doesn't own any assets.
He doesn't own any assets, apart from his business.
Yeah. Whereas, a lot of people say, diversify. Even like we discussed Berkshire Hathaway, they're heavy in Coca-Cola and a few other kind of key investments.
Yeah, and they've got, they're really key in 4 areas of their business. 5 if you include the investments, which I don't. But energy, utilities, manufacturing, and insurance.
Yeah, and I mean, like my personal wealth has, the business has elevated that significantly. So I think you're right. It is a tough one. I think you probably do need to. I mean, no business lasts forever, and no investment lasts forever. So I think you need to know when to get out if you are going deep.
Yeah, and how to be sensible about kind of that succession planning piece and that kind of almost estate planning. And I don't think people really think about estate planning in New Zealand often. Not something we think about and begrudgingly get a will or something when we buy a house because that's what we're told to do and we need to get, life insurance or whatever it is at that point in time. But there's not too much considered planning around, okay, well, actually, my household should be structured like a business. And we should think about how we're going to get somewhere because otherwise we may not get anywhere or we may accidentally get somewhere that we didn't want to be.
Yeah, no, exactly. What's your opinion on diversification versus, I guess, going down a singular business?
Well, I like Druckenmiller's view on this, and I tend to agree with it, which is have all your eggs in have all your eggs in a basket and watch it very carefully. So be concentrated, but you don't have to be all in, and then almost think about how do you hedge. So if I'm putting all of my effort into my business, but I'm able to actually save and invest into, let's say, a diversified ETF portfolio at the same time, I go, well, look, on the right-hand side here, I'm building a portfolio that I expect can actually pay me a decent income maybe when I look to retire, but I'm really focused on the data. I'm going back to work. You know how Buffett was like, buy the S&P and go back to work?
Yeah.
I kind of see it as that.
Yeah, that makes sense.
And then if there's a serendipitous moment where you get an opportunity to be involved in something, whether it be with capital or time, that you have a bit of an edge in, like take those opportunities to be lucky. Like, if you can put in...
So I wouldn't divest from the S&P to go all in, or you would?
My approach with my investing into public equities is like, once that money goes into that account, it's not coming back.
Yeah.
And that's just a practice that I've created. But that, if I build up a nest egg of $250,000 and I have a very clear idea of how I could utilize that capital, when I invested in Tesla very early, and actually a good portion of the capital from exiting from Tesla was able to start this business in its infancy. So there are times where you can do that. So yeah, like at the end of the day, if you're able to start something from scratch and actually build it, you're probably going to get a better return than the S&P.
100%.
But the S&P or it's kind of what I think about it around beta versus alpha. Like with my equity portfolio, I'm just like potentially, it depends if I have 2 parts of the equity portfolio, an active approach and then a passive approach. With your passive approach, I'm trying to basically compound and lazily outrun inflation. And with the active side, I might be looking to get some alpha, generate some edge. And then the biggest opportunity, the biggest impact I can have is where I'm putting my time. But obviously at certain points, and where you're at personally might impact, like the ultimate impact you can have. At this point in time, Berkshire probably creates more leverage by by the resources it allocates and the time they spend.
That's true.
Yeah, so I guess it depends where you're at. For us, for me, I was like, when we're thinking about it, I was like, people have some really it's that arc thing. It's like no journey is the same, and you don't actually accumulate in a nice even curve. Yeah, it's like you accumulate and then you probably actively decumulate for a bit. Like if you invest, right? You build a nest egg, you invest that money to build your business, and then you're decumulating from a liquid asset perspective, but your illiquid asset or net worth might be going up. So I think what I really would like us to help achieve in market would be, hey, how do we help people navigate a pathway that we all really know is not the same from the person? Yeah. And from a podcast perspective, how do I as an operator and an investor have the opportunity to speak long form for extended periods of time? That's really great for me. That's really great for people that are following our journey or interested in our business to understand how essentially the leadership thinks. But also for business owners, not many business owners have the opportunity to actually think in long form and communicate in long form to potential clients. Yeah, which is where the magic is.
Yeah, that I agree.
And that was the thought process behind it, and that's why the kind of conversational nature of it's really important, because actually you win people over by the subtleties of communication over a long form.
Exactly. And also I'm not a very good salesperson. I'm not very good at the hard sell, buy this, almost the buy me, sell this pen type style. But I'm relatively good at if someone has a question, just giving them the answer, and then, if that works for us and works for them, then that's good. If not, then it doesn't. And as we discussed earlier as well, I think retention is the most important part of a business rather than acquisition.
Yeah.
Because I've worked in businesses before where it's been a bit of a loop with churn, and churn has been the biggest cost, I believe, to the business than retention could ever be.
Super interesting. Yeah, that's totally true. I think, and it's often something that's even in forecasts, and forecasts are pretty pointless in many cases for startups because they're never right. But actually, they're a really good exercise for how someone thinks. How has someone thought about this problem? We know that the forecast is not going to be right, and it's not going to go to the plan that you're, forecasting out 2 to 5 years into the future. Obviously, that's going to be wrong. But how have we thought about the problem? What are the variables? What are the risks that you've identified and you've tried to model? And churn is one of those things that is really uncomfortable to think. It's great. You're going to be able to grow you're going to be able to onboard 5 clients a year or a month or whatever, or a quarter. Well, how many are going to leave on average a year? And that's sometimes quite an uncomfortable conversation.
I think our businesses are very different, but in some ways they're quite similar in that I think, yours is definitely kind of what seems like the frontier of, it hasn't been done before. It's a new frontier. Ours is relatively commonplace, but how do we do it, faster or smarter or better? But I think a big thing that we're going to face is disruption, especially by AI bots and information. And the information is available today, so people can technically just Google something or go to ChatGPT and do their own marketing plan.
But it's like copy trading, right?
Yeah.
If you're doing copy trading in one of these paid Discord servers or Signal groups or WhatsApp groups or whatever it is, what I found the psychology there is that you're copy trading, but then you don't know. And it's that similar approach. If you don't have a really strong first principles approach to how, knowing that's right, it's perhaps security will be helpful at helping people learn how to think, not what to allocate to.
Yeah, that's so important, how to think, right? I think that's probably the most important.
I let the service business come in.
Yeah,
that's good experience and the scars and then the context to know from a first principles perspective what's going on, rather than, I'm copy trading or I'm copy marketing.
Yeah, that's a good point.
Because you might not have that conviction.
No.
And then you might give up just too early, or you might stick with something too long because you've been told that's the way.
Yeah.
Like people that like look at technical analysis and they try to learn it and they try to day trade, and then that's what they think investing is. Whereas that's like one small discipline within like investing.
Yeah, that's a good point. That's a good point. And I think also if you copy, you're obviously always going to be second, but also you don't know if the person you're copying or the company you're copying is going in the right direction as well, or in the direction that you want to go.
Yeah. You want to take inspiration, but you want that inspiration to be grounded in a well thought out kind of rationale of why it's important or interesting or valuable to take inspiration from X inspiration.
Have you always thought from first principles? Because I feel like in school it's very much like copy trading, right? Like it's kind of, this is the answer, learn it, and then go and then repeat it in the exam. And then university is sort of a mix of both. But then I found
business is like the game.
is the opposite.
Yeah, so it definitely came from my background in esports professional gaming.
Oh, right.
Where I learned first principles really well. I didn't do too well in school because it was too structured, like in a way where like school is layers and you build on layers and you build on layers. But if you miss a layer, you're not there, you're absent, or you didn't get it for some reason, you might lose a building block that then means that you stop at algebra, and beyond that, you've lost it. And that's kind of the regime of kind of like traditional education and schooling. Whereas like entrepreneurial or free learning isn't layers. It's more free form, right? So one, you can go back quite easily. Two, you learn through experience, and the feedback loop is like, what's the outcome? Which has its own problems around decisions and outcomes. But yeah, I would say that obviously the way that, traditional education has been done is definitely now becoming put into question, potentially obsolete, with all the information we have available at our fingertips and all the abilities we have to learn the first principles of something, because we can get the knowledge. I do, however, think that less people know things deeply now. I do think that there is that, although it's more readily available, the information at a deep level, I think that our tendency is to regurgitate information that sounds good.
Yeah, that's how
So for me personally, I'm like, well, okay, why would I own a Pi fund, right? Oh, well, Pi fund has become, as a structure, has become a marketing tool.
From a tax perspective, yeah.
But if I own, if that product is 20 growth companies, how many of them are actually paying a dividend? Maybe none of them. So does the pie structure apply? Well, based on
A really good point.
Based on the actual fundamentals, no. Owning those individual equities outright would be much more tax efficient.
Yeah, that's a good point.
So it's like, I heard that pies were good, everyone's told me they're good, so I'm going to use it. Rather than, why is it good? And does it work for the use case that I'm applying it? Like, I saw a pie Bitcoin fund. What? So I want to put myself into basically foreign investment tax, that in that case, in a product that is fundamentally, we don't really know what it is. Call it a currency, call it a commodity, whatever you want to call it. It's definitely not paying you a dividend.
No. Do you still, when you sell that, do you pay the 28? You would pay your income tax when rather?
And I don't. Obviously, I'm not an accountant. I don't give tax advice. I say, or an investment advisor. I'm a free-thinking entrepreneur and investor. My understanding is that it's income, and that does raise questions around: would you want to own an ETF or a pie? But or would you want to own the underlying thing? And I think actually with Bitcoin, the confidence of owning an ETF, I personally think is, well, if an institution, like, it becomes an insured product. Because an ETF, like for example with Alpaca, our broker dealer, which we run our brokerage through, the equity side is insured up to 30 million on a pooled basis per client.
Right.
But if you own 10 million of crypto on the platform, that is not covered in the insurance because it's an unregulated product.
Right.
So
what does insurance cover? Is that if the
it's like the SIPC or RDIC insurance regime of if institutions go under, then your assets are owned by you, they're protected. It's just protection mechanisms. Like obviously we don't have nearly as many protections at a banking level as the US does because of FDIC insurance. So
Because banking's only 150 grand, right?
yeah. Yet there's $190 billion of deposits sat in Australian and New Zealand banks that are not getting the interest it deserves and is not insured to the point where it should be.
Why do you think people aren't investing more? Like, do you think people aren't investing enough? And my opinion is that a lot of people don't. They stick to the banks, they buy housing, and somewhere like Australia where you're forced to, put your 13%, I think, on your asset in super.
Maybe there, right? It's like, I think it's minimum 10, isn't it? Something like that. Yeah, I mean, definitely in New Zealand, we're basically very concentrated into property, and small to medium businesses are also trading at the moment at a 69% discount to Australian, United Kingdom, Canadian, and US peers on a multiple basis. So there is no argument of they're a bigger market because it's a relative measure based on the multiple. Well, why are New Zealand businesses trading at such a discount?
Why no Australian buyers are entering the New Zealand market to put?
Well, it's because they're getting a 70% discount almost.
30% discount, yeah.
No, at a 69% discount.
Oh, jeepers. Sorry.
69% of at 69. So you're getting a 1.5 to 2 times multiple, let's say, versus your 6+ overseas.
That's crazy.
And that's because there's no liquidity in the market by Australian private equities coming in. There's no succession planning, and there's little modernization.
So it's ripe for disruption potentially.
Massive, and it stems from the fact that the bank and the banking system is so heavily concentrated into property and deposits. That 70% of the asset base of banks here are depositors, but they're not getting. In some cases, they're getting 0.5% a year in interest. But that bank goes and lends it out, right, on a 2-year mortgage, and gets a huge margin.
Yeah.
So it's kind of systemic from there, really. If you trace it all the way back, it's like, well, cost of capital and cost of consuming financial products is so much more expensive in this part of the world than everywhere else, which means that you probably have a competition issue of some But then again, people don't want to really switch yet. They're not comfortable. So there's a trust issue. Even though they don't trust the banks, they trust the banks more than anything else.
That's true.
And then, you have the 2 areas where there's a lot of wealth is property and small to medium enterprise. Both, there's no natural buyers coming in. You've got the $5 million, 5-bedroom house in Remuera. Who's the natural buyer for it other than someone that's the same demographic of you? Right? There's no aspirational purchases that are really obtainable at the moment because property prices are, just on a basic level, if you think about it, if there's a market where, you can rent a 3-bedroom house in Remuera and the rent is 20 to 40% of what the mortgage would be, you probably have a dysfunctional market. And then, what does that mean long term? It probably means that long term, unless something shifts, there's going to be lots of assets that end up trading at a lower mark. Like,
if there's assets or a property asset.
Oh,
yeah, right.
If they need to sell, they will.
Yeah.
And if they need to sell, then they have to adjust to market conditions. Whereas I think you would say that a lot of people have been holding property in New Zealand being like, well, it's going to shift, it's going to turn. And we don't know. Like,
No.
But property is, the reason property still kind of works is, one, you've got a lot of inherent leverage. I think if you look at the net of what it costs you, you might actually, if you use a spreadsheet, you might find that it actually is not as profitable as you think, perhaps.
Yeah.
But 2, because there is a constant devaluation of currency, owning productive assets, but assets at large, you can't get away from it. And you are safer in assets than not.
Yeah.
Because of how much currency is being debased.
Yeah, no, sense.
So it's kind of this weird situation where you go, but if I owned a property debt free, it's pretty nice.
Yeah,
Like I feel pretty good there.
yeah,
So I think it's more of a concern around like liquidity and leverage
right.
rather than anything else. Like, so the SMEs don't have any liquidity, and people that are struggling at the moment in property are really, it's more of a cash flow and leverage issue more so than do I like the asset.
Yeah, that's true.
But then there might be a misunderstanding or a misconception with what does this turn in condition, what really spurs on a change in conditions. And then also if you're actually valuing your asset in the global reserve currency, your asset is actually worth way less because you've got to adjust it to currency.
So USD, you know, yeah.
Yeah. So it's pretty, and it's, yeah. And I think, again, it's go back to work and like, build, do what you can. Positive cash flow is happiness. So if you have positive, I would think of it more like this. Every financial product we consume is shackling us to that product.
Yeah.
And that product has a purpose. You get a bunch of different insurances. Those insurances are there, hopefully, because of a purpose that you are mitigating, whether it be life, income, whatever, right? But if you've got a revolving credit on your mortgage, or one of those accounts, one of those accounts where you have the money in the account, but you don't necessarily use it.
Yeah.
Plus income protection. Are you doing those two things that are costing you money? Are you doing them for the same reasons? Because you might be double paying.
Yeah, that's true.
Income protection plus a revolving credit, they might be there because you're worried about losing your income for some reason. Yeah. But then if you've got both, you're actually paying a lot. And what's the aggregate cost over 5 years on that?
Yeah, that's a good point. Because I bought a house recently because I was always against buying houses because I always thought that, the cost, and I still do think the cost of owning property is sunk, is sunk. Because, obviously a house can go up and they have doubled every 7 years. Historically, whether that happens in future, who knows? But I think it's difficult unless there are a lot of people that have got wealthy in property, right? But from my perspective, I feel like money is much better used in business, but I did buy property as a hedge against inflation.
Yeah.
And also I think,
and you don't have to do as much, although as a landlord, you do have
to. It's too much. You're doing a little bit.
Yeah. Yeah. With your operating business, you're working in it every day. And like you say, if you're able to basically hedge off some of this cash flow into something that you don't have that aren't necessarily so correlated.
No, but it is restrictive to the business to own property. So it is a balance, right? Like I think long term, if you can, the other issue as well is like banks, in my understanding, banks find it difficult to do cash flow lending versus property lending. So at least if you have a property, you can borrow against it for buying a business, at that, and leverage that way. But it is definitely like something to think about. And I think property is getting less and less important to own if you can mitigate your cash flow. Because obviously the historic way to look at things is sell the house or downsize the house, which is the only way you can get liquidity from the for your retirement.
The classic arc, right? Yeah, family home, getting rid of the family home, putting some of it away for their house, and then being in a 2-bedroom.
Exactly, and then timing the cycle that it's gone up. And even people say you buy and sell in the same market, but fundamentally, if you're sold out of that and then held or whatever. And I think yields are really low as well.
Yield like really low.
It's average yield of what, 3 or 4%.
Yeah, and if you're in Remuera area, the yield's probably 1.5% after 2.
So you're really relying on that capital growth, right? And to some degree crossing your fingers that it goes up.
Yeah.
Whereas I think with business and I guess with investing as well, with investing into businesses, you have some control or some control or analysis as to where that could go.
Yeah, that's right. And it's not, there's no squealing.
No,
right? So there's no ceiling, and it doesn't matter what currency you trade. Like, as long as the business is productive and you provide something to the market, whether it be a product or service, it doesn't actually matter what we trade in. Like, we can trade in shells, it's fine. Like, because as long as that business, product, service is providing value to the market, we'll find a way to get that cash flow piece, which is what really is driving a lot of wealth for a lot of people.
Yeah. Over the time. What's your opinion on cash flow versus forgotten the other terminology, but like cash flows and, like cash flowing your business versus growing your business to sell or borrow against, or growing the asset of your business versus taking the cash out. I know obviously your business is growing fast. I've kind of always focused on cash flow, but the most successful businesses focus on, growth, equity growth. Yeah, equity growth. Yeah. What's your kind of what do you feel is like a good balance for that?
Well, I think that like you need to know what race you're running, right? So if you have a cash flowing business that you're going to get a multiple of, let's say, 2 times your EBITDA, right? Then okay, you're probably able to obtain a really high yield every year in a dividend, for example. So how do I utilize that dividend and that cash flow as an asset to then get equity growth is like how I would kind of think about it. Right. A lot of marketing agencies, like, can you take a portion, maybe not of the cash flow, but maybe of your resources, and some design agencies and tech dev houses do this, is can that cash flow or that team and I think of resources, 3 main resources: computational resource, human capital, and then capital. And can you use some of that to build IP that gets you equity value beyond the multiple of your cash flowing business?
Yes, good point.
So it's like, I do think it's important to think about, to know the game you're running. Like, okay, well, I have a cash flowing business. I don't want to run it forever. We had this the other day with one of our private customers. Came to us, was like, I've got this really great cash flow business. It's actually the main asset I have. And if I sell it, I'm going to be disappointed with the asset, the price I get, and I'm going to lose the cash flow. So we're like, have you ever considered a management buyout? And then they're like, oh, that's interesting. I have no idea what that is. And then we're like, oh, don't worry. We have a couple of people in our expert network that have done management buyouts. You should just have a chat to them, see if that's something you wanted to consider for yourself and learn about, because then maybe you don't need to sell the business.
Right. Maybe they're like a partnership.
Yeah, you basically would take someone in the organization that you think is going to take it to the next level, and you find a way to get them on the cap table.
Yeah, right. Yeah.
And then over time, you can get out of the operations, still utilize the cash flow of the business, because you know that it's not a great business for selling.
Yeah, right.
But 10 years from then, you might, because, insurance right now, insurance businesses are trading at really strong premiums that they weren't trading at 10 years ago. And they might not be trading at in 10 years from now.
That's a good point.
So you kind of also need to, it's always great to know where you're at in the cycle of what does this business typically trade at and what is it trading at today? Because if it typically trades at 1.5 EBITDA, but it's trading at 6 today, maybe it is a good time to get liquidity, right?
Yeah.
It's not like, oh, it's $100, right? It's like, no, what's the relative value of that asset right now?
That's a good point. Because I think the other issue with tax, right? Like every dollar you cash flow, you're paying tax on, right? Whereas the equity there's no capital gains tax in New Zealand. So you obviously get a lot more out the other side.
I spoke because a lot of our client base is predominantly business owners and high earning executives. And I think about that a lot. Like, does it mean that businesses should be thinking about incorporating almost like a treasury into their business, like you say, to try and actually manage that tax position? So, should really strong cash flowing businesses should they be thinking about creating some sort of treasury then, if they don't want to basically pay tax on dividends?
What's treasury, sorry?
So, within your business, owning assets that, are passively owned, but owned through the business, and you're not necessarily distributing the capital out of shareholders, you're actually building a balance sheet.
Yeah, like commercial property.
Yeah, commercial property could be bonds and, whatever. Could be an equity ownership in a startup that you work with, like
That's what I'd like to do, actually.
that's estate planning. And that's something, that I'm really interested in because people need to understand. I just think that it's so fun thinking about like the fact that everyone is running their own race and everyone had these unique assets, and how do you optimize them and make it work so that you live a life that you want to live rather than be like trapped to liabilities that then force you down a path that you might not be happy about. Even if you actually 10 years earlier, if you knew you'd be in that position, you'd be like, oh my God, that's the dream life, right? Earning X amount of dollars, got the house, got all the stuff.
Yeah.
But then when you're in it, because you're forced in it and there's no easy way out,
Yeah.
your mindset around it might be slightly different.
Yeah. And also your expectations rise to wherever you are. And, fortunately or unfortunately, like think people
Creep of life, like creep, etc.
And I think to some degree entrepreneurs are inherently, unsatisfied. So
Yeah, that's totally true. So what do you reckon success is like for you over the next 5 years with the business then?
I'd like to. I mean, a success for us is having successful clients. So that's making sure that we, provide optimum service to them, that we provide, value to them, which is ultimately, especially in an increasing world where, anyone with a laptop can be an agency, and where, it's easy to look very good and maybe not perform very good. So it's especially when there's a lot of data, more and more data, more and more scope to try things, your different platforms and things like that. It's so important to hit your KPIs or to work with the customer with those KPIs. I'd also like to do the treasury thing that we spoke about. So start either getting shares into clients' businesses or stakes, working with startups or something, to try and help them and do an equity play.
Equity base, yeah.
Yeah, that's I think would be the next step, because we're often limited by most of our clients are limited by resource rather than market size. Whereas if we could, do almost like a comp basis, or do it at cost, for in return for equity, everyone wins. They can save on their cash flow for management. Plus we can diversify our revenue or equity as well. So I mean, so I think that's probably the next few steps.
And then we've not really talked much about marketing.
That's okay.
But I think, how about this then? It's taken you, you've been working this better part of almost 5 years. And now it seems like you're in a pretty stable position where you'll realize some of those benefits, cash flow benefits. Like, what do you think were the two best things you've done to actually put yourself in this position?
Oh, that's tough. I think the best thing is doing what you say you'll do.
Yeah.
And following up. So I guess consistency.
Yeah.
And retention as well, like focusing on.
Yeah, you can say that a lot.
How can we, because I think a lot of people and a lot of businesses focus on the next shiny thing.
Yeah.
And a lot of our kind of core client base are very much just focused on, the phone ringing, the emails coming in, business turnover happening. So it's easy to get distracted by, AI bots and these different kind of new technological advancements. But really, a lot of businesses just want the basics done well as a base. So it's relatively difficult to do that because it is easy to get distracted. But that's probably one thing we've done well. And also we're constantly looking we're looking forward as well. I think it's easy to be reactive, but it's also more important to focus on the bigger picture. So things like making sure your brand, making sure your conversion optimization is done well. Also business, like sometimes rightly or wrongly offering advice on how people run their business, because if they get the leads in but they don't follow up on time, or or different kind of business practices don't have a CRM, that can make a massive impact on their bottom line as well. So fundamentally it's marketing, but it's also helping helping the business succeed in whatever way we can as well, as a partner versus kind of like client or agency relationship.
Yeah. Awesome.
Yeah, so that's kind of, yeah, I know it's like quite convoluted, but
No.
yeah.
That was really clear. It was clearer than you probably think it was.
Oh gosh, that's good.
But yeah, awesome. Thank you so much for coming on the pod. I really enjoyed it. It's been fun.
Yeah,
Good convo, and yeah, look forward to having you on again.
awesome. Thanks, and I really appreciate your insights as well. It's helpful for me, and it's helpful for business. And I think what you're doing is awesome for New Zealand Inc. As a lot, like I said, financial education is super important, and helping people, personally, get more wealthy or improve themselves is super, super important. So yeah, it's awesome.
I much appreciated. Cheers.